for now, the Federal Reserve has drawn the line at fallen angels, investment grade bonds that were downgraded to junk. And we've talked about what that has done for the investment grade market. And the Fed is also buying, at the moment, high yield ETFs.
Right.
What if, Howard, the Fed goes further into junk territory? What if it decides that it's okay to buy double Bs or perhaps even lower rated debt?
Their arsenal has been described as limitless. I still believe that it'll only work as long as it works, and as long as they're actively doing it. Look, Eric, what if the Fed said, we're going to be the buyer in every transaction? Every bond transaction, every stock transaction, we're going to be the buyer. The Fed has an unlimited checkbook. You know, our checks never clear, so we're gonna buy forever. You know, this Fed has increased its balance sheet up to 10 trillion. There's no limit. We'll buy them all. Well, in theory, they could do that, and in theory, if they bought aggressively, they could make all the markets rise. Now, everybody would know that that's a Potemkin market, that it's a fake, and the minute they stopped, things would collapse.
How do these considerations and concerns affect what Oaktree is doing, affect what Oaktree is buying, and when Oaktree is buying?
Sure. We were a very active buyer in the public debt markets in mid-March. And then on the 23rd or 4th of March, the government and Fed started to talk about what their program would be, and around the 26th they announced it, and that drove up prices in the public credit markets to the point where we're not buying as aggressively at this point in time. So it has changed the market from what it would have been if they hadn't gotten involved, and that has had impact for us. I think that's inescapable.
Do you think investment opportunities are likely to improve from this point forward, where you will see the opportunity, the possibility of making elevated returns again, or are we sort of here now and here for the time being?
Well, you tell me. Will the Fed decide to be the buyer on every transaction? In which case prices don't ever have to go down. In theory, Yogi Berra said, in theory, there's no difference between theory and practice, but in practice there is. But let's talk about the future in a serious way. So I mentioned that the rating agencies believe, and the investment banks, that between 15 and 25% or so of the high yield bonds outstanding will default. That's roughly $400 billion. That's a lot to buy. In April, I believe there were 19 defaults or bankruptcies, and I believe that's the greatest in history, greatest single month in history. And we're just getting going. Defaults and bankruptcies largely occur when companies run out of cash. And the fact that 19 occurred in the first full month of the crisis, and that the crisis has months more to run, tells me there'll be more defaults and bankruptcy. And there, as I mentioned before, there are large, highly levered companies and investment vehicles that the government and Fed rescue program is not likely to reach and take care of. So we believe there'll be plenty. It boggles the mind to think that we're going to have a crisis of the magnitude of this one and not have fallout. And typically, we have been able to profit from that fallout.
So is that to say that while Oaktree was buying aggressively in March, less so now, it may yet become a more aggressive buyer in the months ahead?
Absolutely. I mean, they, like they say in a football game, we take what they give us. And the greater the dislocation, usually the greater the bargains, which means the greater our buying. We think that there's a substantial opportunity ahead.